this was such a cool bottom here this morning. I mean, again, this is textbook, and it was right when I woke up. If it was just the middle of my day and it was no big deal, well, I would just go, okay, boo, 1, 2, 3. Give me some sort of bullish reversal on the other side of this trend line. I would say, oh, that looks like a nice reload zone down in there, so let's get shopping. And I mean, ironically enough, the really, really easy no-brainer trade, and we're just traders. Put your opinion away. All we're going to do is just trade the damn setups, right? So down, up, down, breakout, then down, then breakout. Can I get long off of here? Risk this window here, looking for nothing more than a 50% retracement. And this is a really good example where the market was actually down $20 here on the open. I mean, it's just a crazy. And I saw the CPI number, and I'm like, when I woke up, I was like, now why on earth is the market down $20 on such a crazy ass inflation number? And I think a lot of people, when, this is the New York Open right there. So right in there, they pulled one more FU lower. What do you think the odds are that set up a bull div? Bull div. Can you see it? Willie didn't quite get stupid. Huge div. Look at the size of the div here. Anyway, huge divs. Willie's stupid here. In fact, actually, this is a really good analogy. How does this trade process go? And actually, I was talking to somebody in the day trader room this morning. It goes, first we want trade location. So maybe we'll zoom up to 4-hour chart. Is this a half decent trade location? And you could go, there's the top end of the range. There's the bottom end of the range. So there's our reload zones. Something along those lines, just roughly, about right. So we've drawn our green box. So let's go down to an hourly. All right. So that's that level right there. And we drill down to what is this, 3 minutes or something there. All right. So boom, there's Mountain Man. Then we got the inflation number. Big, ugly number. Market pops and works its way right back down into another reload zone. And then notice as we're coming down into this level, MACD starts to div out. RSI is already dived out here. In fact, actually, MACD dived out here. And actually, I do like this because you think this isn't the best trade location, but we do have a megaphone level right there. There's no way I could take that trade. That's just way too gung-ho for me. But what I definitely like is bull div, Willie stupid, RSI div, huge pop. So we got trade location. We've got the bull divs. We got the econs, especially with the volume coming out here. We got the econs to support a rally here. So at this point, we're just going to draw our reload zone, and we just really want to find a W on the other side of this because we already got the bull divs all firing here. So market comes down, and actually, interesting enough, on this dump, it creates another div. Actually, RSI. Look at RSI, 36.39, 36.78. That's higher. 37, 36.71. Yep, these are all higher. Or 3678, 3671. So this low, 3639, was never taken out. And on this dump right here, this candle right here, we were actually 3678, same thing. Willie never got stupid, but gee whiz, good looking W there. Good looking W there. Seward, you'd be like, well, MACD is turning back positive. And actually, interestingly enough, you can see that MACD actually, it's an ugly one, but MACD actually did W out there. It'd be like that. I don't know if you can see that W, down, up, down, breakout right there. So put it all together. I should have been taking that long. The only problem was I was half asleep. This would actually be a really good example of take profits on one at 50% of the recent range. So this 50% rule should have been drawn off of that high. Interesting how that's there. I think on balance, you really want to try and get that 2-to-1. That would have been a little less than 2-to-1. So actually, I would have wanted to stretch it out. All right, so we sold one at 2-to-1. And this is getting so ridiculous. I would expect you to be taking some more profits. Maybe you say things like at ATR, maybe I'll take another one off. And then I like the idea that really you don't want to be thinking more than about 3-to-1, 4-to-1 on these setups. As soon as you start getting bigger than that, then I've just personally found, especially if you're using things like market structure, trades end up falling apart. So maybe you do something like you say, well, Brian, maybe I'll do A, B, C, D. Maybe I'll take some profits at the A, B, C, D level, which is 2.7. You already had the one off there at 2.1. Maybe you say, Brian, why don't we put an order up at the 1.272? That's an alt A, B, C, D, perfectly valid level. Maybe you get really greedy and you say, Brian, I'm just going to place a sell order against this old high. There's nothing wrong with that. 4.5-to-1. So boom, boom, boom. Regardless, it doesn't really matter. These two cars are now gone. And you use 3 high-low method to trail the third car. So, and really what I want is I want you guys to see that this message is consistent every single time I talk to you. You see the methodology of these 3 contracts. Let one go at 2-to-1. Let the second go at some sort of technical upside objective. On the sell one at 2-to-1, move your stop to scratch on the remaining. Yesterday's example of this, we got the 2-to-1 hit, but then the market rolled over and it stopped us out at scratch on the remaining. On this particular one, you can see clearly runaway train. I might argue, at this point, you can start doing your 3 high-low methods. So then that means, okay, boom, if this was your particular technical target, up to you, whatever. Then you go 1. And this is a module in our level 3 program. In fact, level 3 should be doing this as we speak. Practicing 3 high-low. Something like this. 1, 2, 3. Remember, your stop was at scratch anyway, so now I can move my stop up to there. Oh, wonderful. All right, market moves up to new highs, consolidates, breaks to new highs, so now I can move everything up. 1, 2, 3. So now market's up here. I get stopped out now on my remaining one if it craps out down to here. Market makes a new high. Just keep dragging this up. 1, 2, 3. Now my stop is up here on the final contract. Then market moves up, makes a double top, then a triple top. Frankly speaking, if you saw this and went, you know what, Brian, I'm not a hero. I'm more than happy to take the profits on the double top breakdown here, and I'll just walk away and count my profits. 3.5-to-1 risk reward, actually risking against the entire range. We were just originally risking this W. That's like a 6.65-to-1. Hookers and blower on me.